With markets at all-time highs, are signs of any irrational exuberance, to coin a phrase from about 20 years ago, seeping into the market? Matt Maley with Miller Tabak and Larry McDonald with the Bear Traps report. Matt, I thought that was appropriate, given that we've got a nominee for a new Fed chair. We'll go all the way back to Greenspan. Do you feel like things have maybe gotten ahead of themselves, or does global growth, U.S. growth, earnings growth, reasonable valuations, does all that stuff make this market not just at new highs, but a sustainable new highs?
I must admit, I'm getting a little worried here. We're not seeing the kind of euphoria that we saw in 2000 or 1999, but we are starting to see some euphoria start to creep into the marketplace. I mean, you look at its sentiment. The II data out this week shows the spread between bulls and bears is basically 50%. I mean, we haven't seen that in 30 years. So this is no longer the most hated rally or most hated bull market in history anymore. There's some bulls coming in there. And we're also starting to see some of the traditional signs of we're getting near a top being explained away for whatever reason. And a key one right now is the yield curve. I mean, it's flattening. It continues to flattening, making new lows, whether you're looking at the 2s to 10s, 30s to 5 to 30s. And the thing is, you go back to 1999 and 2007, the yield curve was flattening for a year while the stock market was going straight to the moon, and that's exactly what we're having now. And of course, people explain it away, and it didn't matter until it did. Now, again, I'm not looking for a repeat of any of those 2 years, but we are seeing some signs that some of the euphoria that people have been worried about is starting to creep into the market. Yeah,
well, we joked yesterday on Power Lunch, Larry, that the inverted or flat yield curves have predicted 7 of the last 3 recessions. I mean, they can be a tell. They're not always a tell. I hear Matt's points. What do you think is going to happen with the stock market?
Well, if you look Friday, we had the S&P was up 20 handles, and the amount of new highs on the New York Stock Exchange was only 160, which was trending down. So new highs have been trending down for weeks. The amount of stocks above the 200-day moving average have been trending down. So you definitely have a tired bull. And the biggest thing to watch for, I think, is the global growth story is picking up, and central banks around the world, think of like Bank of Canada, ECB, Bank of England today, and the Fed, they're all trying to do this like dovish hike, one and done. They're trying to slightly pull back a combination. But at the end of the day, they could, because of this global growth surge, the central banks, including the Fed, could very well get forced to hike or take away a combination faster than the market expects. And I think that's what's going to happen in the next couple quarters, and that's what's going to, the market's not going to like that one bit.
All right, Matt and Larry, a good discussion there, and we're looking at a market that just continues to confound, but you could say that about every market in the world, because the U.S. markets are actually kind of middle of the road for global gains in the last 12 months. Guys, thank you both very much. Appreciate that, folks. As always, thank you for watching Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.